everybody. Sorry, I've been waiting to do that for a while. Super excited about 2021. Super excited about all of this news I have to go over with you guys. So I'm gonna go ahead and jump right into it. I hope you guys were able to see the whiteboard that I posted, because I really need for you guys to take notes, because the stuff that I'm going over tonight, Wednesday, Friday, and then all of next week, all of this stuff is going to be the foundation for your stock trades, for your Forex trades, for your options trades, for your investments for the rest of the year, the rest of your life, those things you want to pass down and teach your kids, teach your friends. So I am going to get started. I have a lot of stuff I want to cover with you guys. So I'm going to try to do this as efficiently as possible. So the first thing I had on the list for you guys was the Forex Factory calendar. So I'm going to go ahead and start with that. So if you were not on the call when I went over the Forex Factory calendar, go back a couple of Zoom calls and look at the call for, how to go through and look at these different links and stuff. I'm going to highlight certain things out of the news to really cover tonight, and then I'll be covering more important news items on Wednesday. All right, so this is the Forex Factory calendar. You find this by going to www.forexfactory.com. And whenever it comes up, you'll only see one day, but if you go to calendar up at the top, you can select however much time you want to see. I choose the weekly view because it helps me to see Sunday to Saturday for that week. But then also on the Zoom call, while I'm trying to go over the news with you guys, it's easier to scroll instead of having to click and wait for each day to load up. So today is Monday, and we had quite a bit of news that came out today. While you're looking at this, you don't really see anything because I loaded this up like early this morning, so there were no numbers here in the news on the news side, but there are now. So I had already reviewed these news items elsewhere, kind of looked them over, so we could have a really good discussion about them. So for the GBP, the final manufacturing number that came out was actually pretty good. I do have some GBP news that I'll be covering in the general section. But for when this news came out and for the period that it came out for, it was actually pretty good, considering that the UK had one of the strictest lockdowns of all of the developed nations. And if you're looking at it in the news, they'll talk about them being like G7 nations or countries, democracies, currencies. So of all of the countries that you can kind of lump together as being like the major currency countries, we'll put it like that. They had one of the strictest lockdowns, and plus they were like towards the end of Brexit. So a lot of that was taken into consideration. And considering the fact that there were a lot of issues that they were having towards the end of Brexit, them having a positive number right now is actually really good. So moving on, there were OPEC meetings all day today. These were OPEC meetings in conjunction with the United States, Canada, and some of those other countries that aren't a part of OPEC directly. I am going to take you guys to their website later in the general news, just so that you guys can see what they offer, what's there on the website, how you can kind of look forward to the future and kind of predict pricing for certain things. The Canadian news item, there wasn't a forecast for it. It just came out and it was better than the last time. So a lot of these manufacturing numbers are good because when you think about what happened with every nation was having to manufacture a lot of something, whether it was ventilators, whether it was masks, um, products. There was a lot of production that was happening, a lot of manufacturing happening to try to sustain people that were staying at home, to try to just sustain economies, period. A lot of production was happening. So it's not uncommon when things like pandemics happen to see manufacturing numbers high. So tomorrow there are OPEC meetings, and then the US has its manufacturing number that will be coming out. I want you guys to take note that on the weeks where we have NFP numbers coming out, which are the job numbers, this is always going to come out on the Tuesday or Wednesday before the job numbers. So it's always going to be the first full week with no holiday, no breaks, no long weekends that we get the jobs number. On Wednesday, we get the preliminary jobs number. It always comes out towards the beginning of the market open. We will get a speech from the Bank of England governor, and then we'll get these FOMC minutes. I will also tonight be talking about the Fed. I won't go into a lot of detail about the speech and how to read speeches from the Fed tonight, but that's something we'll talk about on Wednesday after the minutes come out. I'll show you guys within the speech things to look for, things to pick out, and how to use that effectively for your trades. And then moving forward towards the end of the week, Thursday, we always get unemployment claims on Thursday. We always get those at 9:30 in the morning for the most part. There are some mornings where they come out at 8:30. So between 8:30 and 9:30 on Thursday, you are going to get an unemployment claim number. ISM services numbers, those come out the same week as those manufacturing numbers and on the week of non-farm payroll. What do I keep talking about non-farm payroll? Well, that's the jobs numbers. That's Friday. That's when we find out about average hourly earnings for people who are working. We find out about the employment change. We'll find out about the unemployment rate, and we'll also get those numbers for Canada. We won't get a lot of detail about the ones for Canada per se because it's US news. It affects our economy more. And it affects what's going on here. So a lot of the emphasis that you're going to see in the numbers this time are going to be, okay, what happened with the resurgence of COVID? Has that affected pay? Has that affected jobs? Have people started to lay off again? Did we really truly recover in certain job markets? So that's what we're going to see on Friday. I'm really going to delve in super deep. And when I say super deep on Wednesday, like I'm going to pull up the last non-farm payroll report that came out in December. And we're going to like go through the whole report page by page. We're going to do that because jobs, everybody on this call either has one or had one, or don't want their kids to have one, or family members to have one. So they affect us personally, like directly. They affect our money, how we pay our bills, how we do pleasure spending. So I want you to see how the government counts these jobs. I want you to see how they take into account wages. I want you to see different job sectors. I want you to see how many people are educated with jobs, uneducated with jobs, how many women have jobs, men, Black, white, Asian, Hispanic. Like, I want you to see how they break these numbers down and how, whenever they're talking about African American or minority employment, how and where they're looking for these numbers in these reports. Because when you know, then you can make very informed posts on social media, have very informed conversations with your friends, and then challenge these numbers whenever your news outlets are telling you, because you can actually go and say, well, that's not what the job report said. Job report really said this. The media just kind of did its own little spin, but that's not what it meant. So you can actually really and truly know like how the markets work and know if the media is telling you the truth or not. So I'm going to show you how to look at all of that stuff on Wednesday. All right. Now, now that I'm done with the Forex Factory calendar, I am going to now go into a PowerPoint. The PowerPoint is going to cover Forex basics. It's going to cover the general news items. So I'll go ahead and get into that. Okay, so I was telling you guys about the UK earlier and telling you about their manufacturing numbers. So the UK had a pretty strict lockdown on last year for COVID. Well, now that there's like a UK version or strain of the coronavirus, in addition to a South African strain, so there's currently 3 strains of the COVID coronavirus out there. The UK has now gone back into a super strict lockdown. This lockdown is reminiscent of the lockdown they went into in April. Um, this lockdown involves closures of secondary and primary schools. Um, it still allows people to leave their homes for essential shopping, exercise, and medical assistance, and then to also escape domestic abuse. And I didn't put that. I mean, obviously, when I typed it, I put it in quotations, but the quotations weren't of me. It was how, whenever they wrote Boris Johnson's speech and published it, it's how they actually had it in the speech. So they had to escape domestic abuse in quotations. They had it in quotations because to escape domestic abuse to them means a wide range of things. Um, to get away, increase stress levels, abuse, they define abuse super widely. So that was why it was in quotation marks according to them. I chose to leave it because that was how they published it. So I wasn't trying to be funny whenever I put those there. Um, their lockdown also includes international departures, which are now limited to legally permitted reasons, such as work, government travel. Those are pretty much the only reasons now why there should be any international departures and people leaving the UK. They still have outdoor venues closed. Um, they do have some sports, some things that will be able to go ahead, like places of worship and certain social areas that they deem essential. They're going to continue to keep those open. And then also, the UK is one of the first countries to offer the AstraZeneca vaccine. So um, we'll see how that goes within the UK. So speaking of vaccine, if you follow the stock market, you saw that the stock market, when it first opened, there was some hope for the market, and then the market dropped for like 600 to 700 points today. Um, Part of that was because the vaccine rollout here in the United States is super slow. They had hoped to have double digit or close to double digit vaccine delivery within the population. But up until this point in time, there's only been about 4.5 million doses given. So people are afraid that now we could be going back into a situation where we're in lockdown again. People aren't going to get the vaccine. Travel is going to be restricted. Um, just movement within your own community is going to be restricted. So that was part of the reason for the drop in the markets today. Um, and sticking with the healthcare and vaccine theme, there are hospitals right now that are paying nurses $10,000 a week to work in critically staffed areas. That doesn't necessarily mean they have to work in a COVID unit. They just have to go work in a hospital where there may have been typically like 50 nurses on a shift, and now there's only like 30. So they're paying nurses like $10,000 to go work in these critically staffed areas and just help out. That's in California is where it's really happening. California, New York, Florida, Texas. Those are always, when we talk about critically staffed areas in healthcare, those are typically the 4 states that we look at first for having issues. Um, there are in California, one hospital was noting a COVID vaccine, I mean, a COVID admission, excuse me, a COVID admission every 6 seconds, which is a lot. So that's like about, yeah, about 10 to 12, according to their calculations, 10 to 12, because I was trying to make their numbers work, a minute. And so when you think about it, people who are being transported to hospitals, people who need beds, like for other issues, aren't able to get beds. And currently, there are 8-hour wait times for ambulance delivery. So if you call 911, you have an issue, an ambulance comes to pick you up. You literally have to sit in the ambulance. You can't get into the emergency department in some of these hospitals, which is how critical it's been. So, um, COVID is really affecting some areas. The market is seeing these things. And I'm telling you all of this because I want you to know that if this continues and if the market continues to see COVID in a negative light, then this is going to affect US 30, NASDAQ, and SPX trades. And you can expect those indices to sell off if you continue to see the resurgence and the issues within the healthcare system again. For those people who trade stocks, for people who know about Chinese stocks and Alibaba, Jack Ma is missing. So he's the CEO of Alibaba. He hasn't been seen since this past October. He made a statement in public that was pretty critical of the Chinese government. So anytime you do that, um, you either have to lay low, go on the run, or stand your ground, and then in all those cases you won't get seen for a while. The very last one you probably won't get seen again ever. um so people are just waiting to find out what's going to happen. I brought this up and I'm telling you this because if you trade Chinese stocks, you trade Alibaba, um Tencent, those um those stocks that are actually listed on the American markets, if you trade those, then know that if Jack Ma continues to remain missing and the Chinese government doesn't make a statement about what's going on, it could look really bad on the Chinese government that they don't allow their tech officials to speak and that they're really critical of their CEOs and they don't allow for democracy within their corporations, which is not good for us because then that kind of limits what they can say and kind of limits investors to the information they can get from these companies. The other reason why it would look bad is because if you trade Chinese stocks and let's say he continues to remain missing, who's running Alibaba? How do we know that his vision is going to continue to be fulfilled? And this doesn't look good for Chinese leaders because at the end, or the leaders of these companies, because then it's like, okay, they're going to be on edge. They're going to be less likely to say and speak their mind. So investors are going to be kind of weary of the information that they get because they're going to feel like, okay, the information I'm getting now is always going to be positive towards the Chinese government because of this issue. So that's the reason why I'm bringing up all of these items because they affect trades or a stock in some sort of way. And I want to include everybody. So one of the major reasons for why the market was down today was because of some statements that was made about the Georgia Senate race. So on the one hand, we had Trump saying on a phone call that 11,780 votes needed to be found. And then we also had Joe Biden, on the other hand, saying that if the Democratic Senate candidates were voted in, then $2,000 checks were going to go out right away. Why would that be the case? Because if the Democratic candidates actually win the vote, that would make the Senate 50-50, which would make Kamala Harris the tiebreaker, and she's a Democratic candidate. And so any of the Democratic policies that need to be passed, if they can't get it done in the Senate and it ends up being a tiebreaker, she's the tiebreaker. And obviously she's going to go with Joe because, it's her party. So the markets were kind of wavering because we talked about this a little bit last year, but I'll go over it again. The corporations don't like Democrats. This isn't coming from a place of, telling you who to vote for, who to like. This is just telling you logistics of how the stock market works. The stock market does not like Democrats because Democrats tend to like higher taxes. They tend to tax corporations. They tend to be really strict on the rules of corporations. So if Georgia's Democratic candidates win, they're calling it like a blue wave. So the Democrats will control pretty much every element of Congress, including that tiebreaker that I just mentioned. So that means that any bill that Joe Biden wants to put through is likely to get passed because he has all the candidates that are for his party in places to make it happen. So anyway, that first question that I have here is, who do you think that the indices want to win and why? The indices want the Democratic candidates to win because that will make it harder to get things through the Senate, as we've seen with these stimulus checks lately. It's the House has passed these things, but it's been hard to get through the Senate. And then who should you want to win if you care about money? And I put if you care about money for a reason. So if you care about your money, you care about taxes, you care about keeping things stable and where they are, the Republican candidates. This not to say that you, most of us on this call are in North Carolina, not everybody, but if you're in Georgia, and you're thinking about the future, then it's like, okay, I would want the Republican candidates to win because when it's time to push through these tax issues and policies, that's the point in time where, you have to start thinking. So I also put, how do you reposition yourself? So if you're the type of person, you're like, I don't care who's in office, I want to make it work, regardless. Okay, how are you going to make this work? So think about what the tax implications are, what the things are that Joe Biden and Kamala Harris have said that they're going to do. So they've already said that they're going to raise taxes on those who make over $400,000 a year. We already know that. And we already know that they've said that they're going to raise capital gains tax and corporate tax. We know that. But there's an element to what they have said that people aren't grasping. They're raising taxes on everybody. People don't understand when I say they're going to raise taxes on everybody. They're like, well, they're not going to raise taxes on anybody who makes less than $400,000. Yes, they are, and here's how. When you file your taxes every year, there is a section that allows you to claim a credit or deduction based on your retirement contributions. They're taking that away. So they're taking away the tax floor that you get for having an IRA, for a traditional IRA, for having a 401k. They're taking away that tax basis for that. So when you're putting in money and whenever you're getting ready to file that on your taxes, it's going to look a lot different. So what they're going to do is take away the benefit that you get tax wise for putting money in. And at the end of the year, they're going to give you a 26% tax credit for every dollar that you put into your account tax wise. So that's why when we're voting for candidates, like it's cool to know, like, okay, I'm a Democrat, I'm going to vote Democrat, or I'm Republican, I'm going to vote Republican. If you do that, that's fine. That's your choice. But just know everything that comes along with a candidate, whether it's the one you want or not. So if in Georgia's Senate race, if the Democratic candidates win, just know that not this tax year, well, it would be this tax year. It won't be for what you're filing, it will be for what you will file next year. Let me put it like that. So when you file your taxes for 2022 and 2023, expect your taxes to be a lot different. Expect how your employer sends you letters about your contributions to be a lot different, because if this tax bill passes, then that's what taxes are going to be like. You're not going to get that tax cushion anymore. It will be something that happens in April on your taxes. All right. So now I'm going to jump to OPEC. I am not going to spend a lot of time on OPEC. I just really wanted to go through and kind of tell you guys about OPEC because I was talking about it in the news. So OPEC is the Organization of the Petroleum Exporting Countries. They are also known as the oil cartel. It was started in the 1960s, and it was started by all Islamic countries when it initially started. So this is now 14 countries. They account for 44% of oil production in the world. Now it's a little bit more, and they have 82% of the proven oil reserves around the world. So this gives them a lot of influence and a lot of control over oil. I also have the 14 countries listed here. Some of them are, or most of them are in the Middle East and Africa, and then there are a couple in South America. And I wanted to show you pictures instead of like talking to you about it in words. So the picture on the right shows you all of those OPEC countries, like how much oil reserves they actually have. And then the picture on the left is showing you like the non-OPEC countries versus the OPEC countries. So the non-OPEC countries would be countries like the United States and Canada. And then all of this in blue are just those 14 countries. I always like to show this picture because I want you guys to like put it into perspective. When we start talking about oil prices and what's going on with oil in the world, know that for the most part, we're talking about these 14 countries. Also, whenever we're talking about oil, I want you to understand that whenever we're looking at crude oil prices, most of the crude oil that we get here in the United States comes from the Middle Eastern countries that are listed here. So Saudi Arabia, Iraq, um, the UAE. So we get most of our oil really from those three countries. But from the Middle Eastern countries is where we pretty much get our oil. Brent oil is another type of oil that you'll see if you've been looking through and kind of browsing the list of things to trade in Forex. We'll go through and talk about all of the different types of oil and stuff on another day. I just want to throw it out there so you can write it in your notes and know that that's something to look out for and to look into. And, we'll highlight it on another Zoom call. Okay. Then the last thing I'm going to talk about from the web page because I'm going to tie a lot of stuff into I'm going to come back to after this Federal Reserve portion. It's a lot, so just hang in there with me. All right. So Wednesday we have FOMC minutes. So this is when our Fed is going to be talking to us. It's going to be the first set of minutes to come out for the year. Definitely looking forward to these. I wanted to go through and show you their website, because when I tell you to go to the Fed's website, I want you guys to already know like how to navigate it and how to get to what you need to get to, based on me just telling you what they're doing. So when I tell you guys that they have a speech or they're changing interest rates or anything like that, the first thing you should do when you come to their website is go to news and events, and press releases and speeches should be the first two things that you go for. You can also go for video, because there'll be videos oftentimes of the speeches. And then the other thing you can do, it won't be important at that time, is what you can do now is click on the calendar. And whenever you click on their calendar, it's literally going to pull up everything for the year, um, that's coming up for the Fed. As you can see, the Fed typically has something going on every day. There are certain things that are going to be highlighted, and certain things that they're going to have in bold, but you just check it out. Look at their calendar and see what they have going on, because it's pretty interesting the stuff that happens with the Fed that they don't necessarily share in the news. So the calendar is there. I'll click on speeches so you can see what this tab looks like. So any of the Fed officials that give speeches, they're all going to be here. So this can be a speech from Jerome Powell or a speech from any of the other Fed chairs. You click through here, it'll tell you who gave the speech, and it'll let you watch the video if there is a video for it. I really would love it if you guys would go back and watch the Fed speeches or any of the material that they had from like 2019. Um, these articles from 2019 really go into a lot of the digital currency, cryptocurrency. Um, I started to notice in 2018, the beginning of 2019, that they really started kind of talking about cryptocurrency here and there. But they really started pushing cryptocurrency and talking about cryptocurrency a lot, towards the end of 2019. There is a speech, um, if I can find it to tell you guys the day, was at the very end of 2019. Jerome Powell gave a speech, and he talked a lot about cryptocurrency actually. Okay, so here we go. It was this one. So we get financial stability, pretty much over 10 years. So our Fed will give us their outlook for the next 10 years. They'll tell us how they feel that the money's going to look. They'll tell us how they feel that the markets are going to look over a certain period of time. That one just happened to be 10 years, um, whenever they gave it. This one wasn't by Jerome Powell, but this one started it, because it was the actual report that they had put out. Opening remarks here in October, as well as this U.S. economic outlook. So I would say start around the beginning of October. You don't have to go through them all. Just pick a couple, look at them, especially the ones that are by Jerome Powell. Really take them in and just kind of see what the Fed was talking about leading up to 2020, especially when it comes to cryptocurrency. Um, the structure of our Fed, this is the one of the real reasons like I want you guys to kind of like look through this and understand the site and understand what happens in our government structure. and then I'm going to go on to Forex basics after this, and then I'll be done. So within our Fed system, we talk about the Fed. The Fed has two mandates: maximum employment and stable prices. But they also have other goals and missions as well, and how they function within our government. They function to actually conduct our monetary policy. They help maintain the stability of our financial system. They supervise and regulate financial institutions. They foster payment and settlement systems, which is why they are talking about cryptocurrency. And then they help to promote customer protection and community development, which means giving the underbanked banks FDIC insurance, um, stability of the financial system, which means, interest rates, regulating and supervising the financial institutions includes like giving the banks money, helping to make sure that the overnight monies that banks might need to operate for the next day are given. And all of this is done under the Federal Reserve System. And then that system consists of the Board of Governors, the 12 banks, and then the Open Market Committee. We typically hear from the Open Market Committee, which publishes the reports that come from meetings that are held from all three of those groups. So um, this is a map of what it looks like. So hopefully you know which state you live in. Find your state on the map and then see what district you're in. So if you live in North Carolina, um, you're in District 5, and we're included and lumped in with DC for that region. If you're in Texas, you're in 11. If you're in Kentucky, Kentucky is split between Region 4 and Region 8. So, you can find your state, you can click on it, see who your regional Fed president is, read about, their policies, their mindsets about money and banking. A lot of people would think living in the DC region would put you at an advantage, but it doesn't. New York actually has the advantage because all international transactions that are done in the United States go through New York. So that's why it's really the smallest region outside of Philadelphia. Philadelphia is the second, um, because they transact a lot of money. So when you hear in the news that they're giving money to the New York Fed, it's because they have a lot of international transactions that go through their banks, which is why a lot of things shut down because of 9/11. A lot of the banking centers and financial centers were in the World Trade Center. So, just kind of, it's not stuff that you just have to know off gate, but it's just something to know and keep in mind. And this is another picture I wanted you guys to see, solely because when we talk about stimulus money, when we're talking about policies and all that kind of stuff, Congress, who is the House and the Senate, and the Senate seats are being, I don't want to say fought over, but they're still going through the election for those. They oversee the Federal Reserve System and all of those three committees that we read reports from. So I just wanted you guys to see that and keep that in mind. So that's all there. You can come here, see all of that under the um, About the Fed tab. All right. So there's one thing I wanted you guys to see. I'm not going to cover this whole report in detail, but um, the Fed covers actual dollar bills, how they're produced, how many are in circulation. But our U.S. Mint controls coins. So I wanted you guys to see, because we've talked about the coin shortage. This does go into now talking about Forex and the basics of Forex. You see how these numbers are pushed out to 4 digits? That fourth digit is the pip. So when we're talking about money and Forex and we're talking about counting pips, we're looking at the fourth digit after the decimal place. So in looking at this report, talking about coin shortages, why was there a coin shortage? How could a coin shortage be? Um, Over the past several years, it's been more expensive to produce coins. So currently, well, in 2019, it costs about 2 cents to make a penny. It costs 7.6 cents to make a nickel, 3.7 cents to make a dime, and 9 cents to make a quarter. So we're actually losing money as a country making pennies and nickels. I just wanted you guys to see that. So when we talk about coin shortages, why weren't coins produced? Because the economy was pretty much at a standstill. And at the end of the day, when the economy is at a standstill, we don't know where money is going to be coming from. If people are actually going to spend money, it's kind of hard to know, okay, should we continue to produce these coins? So they actually kept old coins in circulation and didn't really go about producing new coins as they typically would have. All right, so Forex basics. I have fun facts, but I'm not going to cover that stuff right now. I want you guys to, if you didn't take notes when I went over some of this stuff the last time, really like pay attention to this because this is going to be like your super foundation for 2021 and how to really be disciplined with your trades. So everybody on this call needs to have a trading plan. If you don't have one, don't know how to make one, write at the top of the page in big letters, I need to have a trading plan. I need to make a trading plan because that is what you're going to stick to this year in your trades. I'm actually going to go over how to make a trading plan on Wednesday. Also, be patient and disciplined with your trading plan. So if you're on a call like tonight, and let's say you do have your account set up, Mr. Levels gives out trades, don't try to take all of them. Make sure that you're sticking with 2% risk and make sure you stay disciplined with your trading plan. If your trading plan says that you will only take 2 trades a day, only take 2 trades a day. After that second trade, put your phone down or move the app, hide the app, close it out, do whatever you have to do. But make sure you stick to your trading plan because this is a marathon. It's not a sprint. This is definitely a process that you want to take seriously. And it's a process that you want to make sure that you do very well. And doing something fast only leads to mistakes, especially with trading because wrong buttons, wrong numbers, that can be very costly. And then practice risk management, no over leveraging and going over that 2% risk that I talked about. That's what separates you from being a gambler. A gambler just puts money out there hoping and wishing. You are putting 2% out there. And yeah, you can say, oh, I'm hoping and wishing with this 2%, but it's not everything you have. You're not, going back to the drawing board like, oh man, okay, I lost that money. Now I need to go and try to put double in because I lost. No, 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 no. It's 2% of your total account balance, and that's it. And you're sticking to your trading plan. That's what's going to separate you from a gambler. And when people say, oh, well, trading's just gambling, you can say no because, and those are your reasons why. That's what separates you from that impulsive person who's probably going to blow their whole account. And then trade what you see, not what you think, which means trade with logic, not emotion. Keep your mind open. Don't feel like you know exactly what's going to happen because the market can do what it wants to do. Use your brain cells. When Mr. Levels teaches you how to find different things, when I teach you about support and resistance and how to read a chart, like it's basic things. Don't forget the basics, and then run your own race. Running your own race is super important because don't keep up with the Joneses. Don't compare yourself to someone else. And when Mr. Levels or I or someone posts a trade in the group, here's your first thought process. And you have to train your mind to think like this. When someone posts something in the group, congratulate. You don't know what their account size is, so you don't know, if $50, if them making a $50 profit, you don't know if that was them leveraging 1% or 2% or over leveraging their account. You don't know. So congratulate, see what they did, and if they're a person that consistently posts profits, and we're a team, we're a group, ask like, hey, like I see that you do this. I'm having a difficult time. We're all here to work together. This isn't a competition. This is a journey that we're all taking together. So run your own race. But if you see something that somebody else is doing, ask, be open. This isn't one of those environments where I want you guys to feel stiff. That's why we post fun things in the group. It's supposed to be a family. We're supposed to all work together. All right. So I'm not going to go through this whole thing. This is like a course that I'm like writing out. Um, Essentially, what I want you guys to take from this is, what are we trading in Forex? We're trading money. We're comparing currencies. We're comparing monetary systems and economies, which is why I cover the news. Um, and so, it's like having two people on a seesaw. Each person is a currency. We're looking at it like that. You can't have just one person seesawing by themselves. So it's always two currencies compared to one another. If you've traveled, if you've been out of the country, if you've been to the airport, they have those currency exchange stations. This is that. That's what we're doing here. We're doing what you do at that currency exchange booth in the airport, but on the computer, without having to go to the airport and without having to have a lot of money in order to make the profit. That's essentially what we're doing here. We're looking at these major currencies, the US dollar being one of the main ones that we look at. Also the euro. We look at the Great Britain pound, the Canadian dollar, the Australian dollar, and the New Zealand dollar. I put this picture in here. It came from Baby Pips. I like this picture because it shows you where these currencies are on the map. That makes a difference because when we start talking about trading sessions, what session, what time zone essentially is open for trading, this visual comes in handy. So just remember that now it's 9 o'clock here in Eastern Standard Time. Asian market is getting ready to open. So you have to kind of think about how the globe spins. Where is it currently business hours? So Australian dollar, the Japanese yen, the New Zealand dollar, those currencies are going to be more volatile right now because it's their banking hours. Their banks are open starting at like 2, 3 o'clock in the morning. That's when your European banks are going to be open. That's when we're going to get a lot of volatility. They're the largest banking system on the planet. And then 8 o'clock in the morning is whenever the US currency is really going to start being more volatile because that's when our banks open. So this picture comes in handy for that reason. I'm going to go ahead and show you this picture as well. So when we look at those three symbols, when you're looking at it on either trading view, if you're looking at it on your broker, if you're looking at it on Mr. Level's chart or my chart, those three symbols mean something. So the first two letters will tell you what the country's name is, and the last letter stands for what their currency's name is. So this picture right here gives you a good example. So this is the symbol. So the USD is the US dollar. The EUR is the EU stands for Eurozone, and it's just the abbreviated form of Eurozone, or the euro. The symbol here, JPY, is the Japanese yen. Great Britain pound. Swiss franc always gets everybody because you're like, there is no S, no W. Where does this CH come from? It's like an old thing. Not even gonna go into it, but just know that CHF, or chef as we call it, is Swiss franc. CAD is the Canadian dollar. AUD, AUD is the Australian dollar, and NZD is the New Zealand dollar, which was in that example. So when buying and selling pairs, I'm going through this kind of fast, but you can go through and watch the recording and just pause it on these slides and take notes. Buying and selling currency pairs. So when you're trading in Forex, we're buying and selling currency pairs. We're trading the fluctuation of these pairs. So when people, if you go back to that visualization that I gave you of the seesaw, when one person goes up, another person is at the ground, and then vice versa. That person that was up comes down towards the ground, the other person goes up. When those people are fluctuating and moving up and down on that seesaw, there is price fluctuation that happens. You can think of the US dollar in this example, US dollar and the Canadian dollar. So when those prices fluctuate, we make money. All right, so this kind of goes back to that picture that I showed you of the map of the trading hours. If you're in the Telegram group, there's a really good visual in there for you guys. If you don't have a good visual, here it is. Shows you that London session, which is, again, the largest banking system on the planet, they start trading at 3 o'clock a.m. Eastern time, and their trading session stops at 11 Eastern time. And that crossover between London and New York is the most liquid time to trade Forex. So from like 8 o'clock in the morning to about 11:30 in the morning Eastern time is like, it's not the only time to trade Forex, but there's a lot of volatility happening in the market, and there's a lot of money moving around the world because you have the first and second largest banking systems moving money and transacting. Best times to trade. So those times where sessions overlap, and then Tuesday, Wednesday, Thursday. It's not to say that those are the only times to trade. It's the best times to trade because that's when a lot of money is in the market. Mondays are iffy because a lot of people don't trade on Mondays, and then banks are trying to, I'm not going to get super technical, but recover from Friday. I'll just put it like that. And then it tapers off on Friday because it's typically the last day of the banking week, last day of the week for most people business wise. A lot of people leave early. So Wednesday, Thursday, Friday is when most people are in the office. Most investors, hedge funds, and day traders are actually trading and pumping up the market. Like I said, it's not the only time to trade. It's just suggestions for the best times to trade. And you'll notice that throughout the year, those fluctuate. All right, I'm going to cover these couple of slides, and this is going to be it. The pip is the fourth number after the decimal place. So I showed you this on that Federal Reserve page, or the page from the Mint earlier. Fourth number after the decimal is the pip. The fifth number is the pipette. The pipette does not really matter. It's definitely the pips that we're counting. Anytime Mr. Levels sends out a pip count for the week or for the day or for a trade, we're looking at this fourth number after the decimal place. I'm going to show you a slide in a minute that is going to be super valuable for your trades when it comes to pips. But in the meantime, for till I get there, trade terminology: long means buy. If we say, we're going long, we're buying. Short means sell. You'll hear those terms more often in stocks than Forex, but I want you to know them. The spread is the difference between the bid and the ask price. I'll show you that on the next slide. And then the pip is the smallest unit of currency. So that's that fourth digit. The fifth digit, that pipette, is a fractional value. So it's only showing you like that 0.5. So 13045, that 5 just means you're at half a pip there. I wanted to show it to you, but make sure you're paying attention to that fourth decimal place. Here is what you're going to see when you open up your broker. You get ready to place a trade. You're going to see the bid price on one side. You're going to see an ask price on another side. The only thing you really need to know, you don't have to remember what those numbers are called. Just know that when you subtract those two numbers, whatever that difference is your spread, which is why whenever you start trading and you place a trade, it could be red. Your trade might be negative for like 2 seconds because price has to overcome the spread before you actually go positive. Remember that. Whatever your spread is, you have to get that many pips positive before you actually start making money. So if your spread is 13, just know that you need to get 13 pips. Then you're at break even and you can start making money. I'm not going to cover in detail right now lot sizes, but whenever you get ready to place a trade, for the brokers that we use, you won't even be able to place a nano lot. Nobody, especially if you're starting, you should only be placing this lot size right here, 0.01. That means that every pip that you are in profit is 10 cents times the number of pips. Or if you're negative, it's that many pips times 10 cents. So if you're up 10 pips, that means that you should be up $1. And then once you graduate to the next lot size, that 10 pips in profit will then be $10. And then a standard lot size, which we'll all be education wise, we'll all be working you towards that 10 pips will be $100. So your lot size is how you're controlling your money. This is where not comparing yourself to someone else really comes in handy. Like really keep that in the forefront of your mind, because you don't know what lot size that person is using, because you don't know their account size. You can easily blow your account if you don't use the right lot size. So I'm already telling you guys what lot size to use if you're new. Those people who have been trading, you know your lot size, you know your account size, you know how to do the math. Beginners, I'm telling you, use a 0.01. Don't use anything more than a 0.01. And I'm already telling you to start 2021. I don't want to hear anybody say anything about blowing or losing their account, because I'm telling you now, 0.01 instead of stop loss. And you shouldn't have any issues. This is the last slide I'm going to cover with you guys for right now. I told you guys I had another pip slide, or I was going to show you something else about pips. Whenever you're trading anything other than a regular currency pair, regular currency pairs are like USD pairs, Euro pairs. They're currency pairs that are not JPY pairs. So how do I know if it's, or how would you know if it's a regular currency pair? It's going to have 4 or 5 numbers after this decimal place, but you're going to be looking for it to have 4 because you need that pip. Um, those are regular currency pairs. So when you're trading those, that's your PIP, the fourth digit. Anything else other than that, you need to make sure that you ask, especially if you're a beginner. It's not to like hawk on anybody, but when I started trading new things, assumed what the PIP was, and luckily I used the .01. But had I not used a .01, I would have been in trouble because I assumed pips and where they were. Make sure you know where the pip is for whatever it is you're trading. The last digit is the pip for gold. If it's a JPY pair, Japanese yen pair, it's the second number after the decimal place. If it's oil, it's going to be the last decimal place. Bitcoin, ask us to help you because it depends on your broker. Different brokers bundle cryptocurrencies together differently. So make sure you ask us for help and then do the same thing for indices. There are some new brokers out there that really want to help people to trade cryptocurrencies and indices, and they change how the lot sizes are formed because they do contracts. So make sure that you ask us if you want to trade those so that me and Mr. Levels can help you figure out where the pip is so that you don't get into any trouble. I want you guys to ask questions. I want you guys to like be interactive in these group chats because I don't want you guys to make a mistake and it could have been something that would have been solved with the easy question, an easy phone call, an easy text message, an easy message into the group. Um, Not everybody that's in the group is new. There are people in the group who have been with us, since the beginning. So they already know what I'm going to fuss about. They know what Mr. Levels is going to fuss about. So put it in the group chat. And if me and Mr. Levels can't answer it, there are people in the group that will definitely give you the right answer. And they know from experience because they've either been fussed at or they've heard me or Mr. Levels repeat it 50 times. Um, all of this stuff that's in this presentation, at some point in time, I will go over all of it. I've given you guys like an hour worth of material to like digest. Um, Not going to harp on all of this stuff tonight. I definitely wanted to show those people who are new some of the basic things about Forex, finding pips, um, knowing what we're looking at, just so you can get the gist. So when Mr. Levels comes on, you can at least be able to begin to follow him and understand what he's talking about. And I'm going to make it, part of my education sessions to help you guys with that information so that then whenever he comes on, you can start building on from the information I've given you, the things you've heard him say. You can really start to put this puzzle together. It's not a big puzzle, it's not small pieces. It's just going to take, dedication for you to be able to pick up those pieces and put them in the right place. So, if anybody has any questions, I'm going to let you put those in the chat. And at the end, I'll let when Mr. Levels is finished and he asks for questions, you guys can ask me your questions then. If you have something that's like really pressing, and you don't want to misunderstand Mr. Levels with something, put it in the chat. Just because I want him to go ahead and get started. I don't want to keep you guys on the call for too long. My goal for 2021 is to keep these calls to like an hour, no more than an hour and 15 minutes. We're going to go over tonight. We may go over a little bit on Wednesday, but my goal is like an hour, hour and 15 minutes. So just know that I'm working on time, but what that also means is that like at 8 o'clock, I'm going to get started. So if you can't be here right at 8 o'clock, it's fine. Just come in and pick up wherever we are. And then whenever you do the review of the video, if you have any questions, just put it in the group chat or message us and let us know. But that hour to hour and 15 minutes means that we should be done by 9:15 Eastern time, given that I start at 8. So I just wanted to put that out there. I'm done. I'm gonna go ahead and let Mr. Levels get started. I know he has great stuff for you guys. Please, please, please pay attention, especially if you've been the ones that have come in off of recommendations or Facebook um, posts you've seen. He's really a gem and a jewel to like the world. The world just doesn't know what Pips has to offer, and he's definitely the reason for that. So listen up, pay attention, make sure that if you have any questions about what he says, write them down, put them in the chat as he's talking, because the trades that he gives out, his expertise, his wisdom and knowledge is like none other. So anyway, with all that being said, I'm gonna go ahead and turn it over to Mr. Level.
Yeah. I appreciate that, Coleman. I appreciate all the love. I appreciate all the love, man. Y'all definitely give Corman a round of applause because she does so much for the Pips LS for the Pips team. Um Pips LLC wouldn't be what it is today without her. So yeah, much love. We appreciate you, all the fundamentals you bring, the news you bring, um, putting us up on economics, Federal Reserve, just OPEC, just everything with fundamentals. You got our back. So we appreciate you. So with all that being said, I'm gonna go ahead and jump into these technicals, y'all. Cool beans. All righty. Okay, so jumping right into it. If my screen unfreeze. All right, there we go. So jumping right into it. Dollar, dollar, dollar. So as we know, for all of 2020, we were selling the dollar. We were bearish the dollar, short the dollar, as Carmen said. As far as terminology, short, we just say selling in forex. But yeah, so we were short the dollar all of 2020, and we're still short the dollar. Um, Waiting to see how things unfold with politics and everything. But I still would like to see the dollar. I think the dollar is going to come down and hit some pretty low lows, all time lows. So um, right now, I'm waiting to see if the dollar breaks back above this structure. If the dollar don't get back above this grayed out structure right here, then I'm going to continue to short the dollar, continue to sell the dollar. And the dollar already opened up bearish for this session. So we'll see if the dollar continue to sell off. I want to see how the dollar react to 89 cents, this level. More than likely, when the dollar gets to this level, we're going to get a good reaction off of it. We'll probably see the dollar come up and retest 90 cent. So that'll be a good opportunity to get in for a counter trend trade. But overall, we're still short the dollar. So with that being said, moving on to our currency pairs. Looking at Euro USD, we already know that our currency pairs move in the opposite direction of the dollar. So we know if we are short the dollar, we're selling the dollar, and we know that we're long Euro USD. We know that we're buying Euro USD. Um, so I got my eyes on this level for Euro USD. I want to see Euro USD come back up and retest these highs. So what that means for this week is, being that we're on the daily chart, um, I see how this bearish candle on the 31st, the last day of the year for 2020, it was very aggressive, very bullish. So I already got the 70-80% of this marked. Um, I want to see if price respects this zone that we're inside of right now. If price respects this zone, then um, I expect to see price action to be bearish for a little while. If we can't break up out of here, I expect to see price action come back down, retest this level right here, and then go ahead and continue to give us our upward move. So that's what I'm gonna have my eye on for Euro USD this week. I keep you guys posted in the Telegram group. Moving on to GBP USD. Basically same thing, because all of our currency pairs that we trade, which is EU, GU, and NU, they all correlate. So, and they all move opposite of the dollar. So we're pretty much expecting the same thing from GBP USD that we're expecting from Euro USD. I want to see um, GBP USD come up into this structure and see how it reacts to this price level here. Um, I got my eyes on these highs over here. I would like to see price come up and retest these highs and grab this liquidity up here. So overall, of course, we are bullish. We are long. We are buying GBP USD. But we could get price to give us a bearish reaction off of that structure right here. Come back down to retest these levels down here, and then continue to push to the upside. So that's why I have my eyes on for GBP USD this week. Moving on to Nzd USD. Let's see. I had to go down to the 8 hour. Okay, that's a little better. There we go. All right. So yeah, I like to see Oh yeah, I still wanted to see. I got my eyes on some imbalance down here that I had my eyes on for a minute. I would like to see price come and fill in that imbalance. I don't think it's gonna come back down this low though, but I'm gonna mark it just cause I just be knowing some stuff sometimes. So we gonna keep our eyes here. Because if the market start going on a start going on a bearish run, then we can have this right here as a target, as well as like this is a target right here. So we'll see how price react once it gets up to this structure. If it hold this structure, if it respect it, then we'll look for Nzd Usd to sell off. Same as Gbp Usd and Euro USD. So um, that's what I'll be looking at for Nzd USD for this week. Moving on to silver. All right. If y'all go back and look at our call from last week, I told you guys that going into the new year that I was going to be bullish for silver and for gold. I told you guys to look for the aggressive candle to the upside. Go back and look at the recording. I tell you guys to go back and look at those recordings because those recordings are just like gold. Like, and pay attention when I'm going over it because I told you guys look for that aggressive candle, wait for the retest, buy. Is this not an aggressive candle? Price pull back, didn't break back below the level. It just wicked below it, but the body didn't break back below the level. That was good money. Only thing you had to do was press the button, buy. Put your stop loss below this low. Keep it tight. That's how you keep your risk management tight. If it comes back and turn around, you take minimum loss. Minimum loss. Minimum loss. But your reward is great. That's a good play for silver. Like 7,000 pips. So yeah, I do expect silver to continue to be bullish. So I want to see silver come back up and retest previous highs at $29. So silver's already starting to play out for us in the new year. Looking at gold, same thing with gold. I told you guys when she broke, wait for the retest, buy. Up to this level we was looking to sell here. We haven't hit that level yet. Excuse me. So either gold is finicky. So either gold gonna sell, give us a good sell off of this zone right here, off of these levels, or it's just gonna explode through it. And being that I'm bullish, I'm long on silver and gold on my metals. it's probably gonna bust through it. But we'll see. We gotta wait for it to test it first. If it don't get there though, then we could very well just go ahead and see gold go ahead and drop and fill in this price imbalance that we have here. So make note of that. Yeah. So either we'll just get a drop on down, a sell off, and then a continuation, or we'll just bust right through this price level here and continue to run gold up. We'll look for the retest. If we do explode to the upside, we'll wait for the retest and we'll buy the dip and we'll ride it up. That's what I got for gold starting out this week. Um, let's look at Bitcoin just because it's fun. What are we doing on Bitcoin? I don't think I gotta say it. We buying the dip. We buying the dip. 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 Just adding to your position. Adding to your position. As Bitcoin go higher and higher, so does your account size. So that's just holding Bitcoin. Now, as far as with trading Bitcoin, you already know if you buying the dip, then it's the same thing basically. You buying the dip, but you got to consider your lot sizes and your risk management when you're talking about trading it. As far as trading it in the Forex market, when you're buying it on Cash App, you're just buying it and holding it. Cash App, Coinbase, or wherever you're buying it from. But when you're trading it, you're trading lot sizes, so you have to be aware of that. And like Corman said, for all newbies, you shouldn't be trading nothing but 0.01 anyway. So moving on to my baby, U30. 30. Well, I wish we would have caught this sale today, but it's all good. We don't get FOMO over here. We just wait for the market to show us what it want to do, and we roll with the market. So let's look at U30 on the daily. We got this aggressive push down. I want to see U30 push on back up, retest this structure here. I want to see U30 sell. However, if she break that structure, then we know U30 gonna continue to buy. But for now, short term, if you scalping, so I would be, of course, buying U30 right now. You see, after you get that drop like that, you're definitely gonna get a pullback. So just let me see one thing right quick. Do that. Let me see. fact, do this on the 4 hour. Mm. That was just a straight drop. Yeah. So just to piggyback a little bit off of what Corman was saying about the most liquid times to trade. So if you see this green line right here, this is the New York Open, New York sessions open, and this blue line right here, this is London sessions open. So right here is 3 o'clock. If you look down at the bottom of the crosshairs down here, you'll see what time it is at where my mouse is circling. So you'll see that if you look down there, you'll see that that's 3 a.m. in the morning, London session. Okay, and then we see here at 9:30, New York session opens up. And we can see it this morning when New York session opened up, the market fell through the floor. It was out of here. Um, I wanted to send out a sell signal, but the way it started it just started falling so fast. I didn't know when it was gonna start pulling back. So I didn't want to send out a sell signal, everybody jump in the sell, and then start pulling back as soon as everybody jump in the sell. I like to catch it from the beginning. So usually when the market open up and it's gonna drop like this, usually it gives a little pullback and comes back up and retest New York's open and retest, I mean not New York, London's open and then drop. But like Corman said, with everything going on with coronavirus and the vaccine not doing the numbers that they expected or that it was projected to do, then that caused fear in the market and caused U30 to just keep selling and selling and selling and selling. It's all good where there's volatility, there's opportunity. So we're right in the middle of the opportunity right now. So we're just waiting on this pullback. And once we get this full pullback, we're gonna see if this was actually just a pullback and this move up is going to be the continuation to the upside, or we're going to see if this is a switching of the trend. So we're gonna see if this a flipping of the trend to say we are going to start selling to the downside, because we can see that we've been in a good recovery uptrend since we had this major sell-off in the market when COVID first hit back in February of 2020. And then we can see we have this uptrend recovery. And so we see U30 came back and retested and broke through those pre-pandemic highs. And now we're still above those pre-pandemic highs. Came back and retested those pre-pandemic highs on this wick right here. And seems like we're continuing to push up, but as you see how these moves get less and less aggressive. So it looks like we're running out of gas. You see how we're just going at this upward angle, like it's a term for it. I think it's a bullish flag. I don't really use the patterns like that because I try to trade like price action and structure, market structure, but knowing your patterns is a good thing. So knowing your bullish flash, your bearish flash, your bullish pendants, your um rising wedges, like knowing your head and shoulders, inverted head and shoulders, knowing all that is very important because it helps you identify certain things in the market. So I want to see how U30 react when we get back up to 30,400. I want to see if it respect this level and give us this sell on down because I really want to see this imbalance down here filled in. We got a good little gap right here. So I really want to see this filled in. And so we're gonna see if U30 give us that move this week. That will be a 16,000 to 18,000 pip moves. So we're gonna see. However, if we break it, then we'll just wait for the retest, wait for it to retest this structure. And then we'll ride it on up. So that's what I got for you. 30 this week. That's what I got for our trade week. If anybody got any questions, have at it. I'm going to unmute your mics and I'm going to stop the recording.